Think Realty Nation, it's Abhi Golhar. Welcome to the Think Realty podcast. I'm excited you're here. You know you're excited you're here. And I'm kind of excited that I'm here. Yeah, that kind of made some sense. Anyway, it's going to be a fun show. We're talking about finances today, what you need to know to continue to be focused on profit and what that really means. You know, as business owners, as entrepreneurs in the real estate investing space, sometimes we forget that the numbers matter. And it's not just the number of properties you're looking at, it's also your financial statement, balance sheet, and overall cash flow situation. We'll be speaking with David Richter, a good friend of mine out of Virginia, who specializes not only in understanding the financial piece, but he's if you think of a CPA, and if you think of a ninja, and you combine those two, that's David. And the first time I spoke with him, I was totally blown away, and my expectation is for you to be blown away as well. All right, that being said, I want to get him on the line, on something. I used to do radio, so I'm saying phone, so we're going to go with that. And before I do, I want to let you all know that this podcast episode is brought to you by Residential Capital Partners, a leading hard money lender with a national scope and a local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves, and they know your business. Visit them today at www.residentialcapitalpartners.com. So here's the show. What's going to happen is I'm going to talk to David, interview him for about 12, 15 minutes, and then we'll talk about what the outlook's looking like for single-family rentals. So that's really important as well, kind of going into the new year and maybe kind of understanding what your goals for next year are going to be. If you're a flipper, you know what? That segment's going to be for you. All right, that being said, David Richter, welcome to the show.
Thank you very much for having me, Abhi.
You got it. I'm excited for this conversation. I've been waiting for it like all year, so thank you so much. I know our people try to get in touch with your people, and you're flying around the country everywhere, and you're just a financial genius. So help me understand a little bit about who you are and what you do.
Sure. So my background is an actual real estate investor also for the last probably 9 years, if you include when I bought my first house when I was just 19 years old. Out of the gate, after reading Rich Dad, Poor Dad, like a lot of other investors. So I read that first, and so I said, I need to stop reading, I need to start doing. So I bought my first house, fixed and flipped it, and actually lived in it for a few years, and then actually did a lease option where I had super tenant. 6 months later, he cashed me out. So I was like, I like this thing. I think I should keep doing it. So I actually partnered with some people that I knew up in where I used to live in Indiana, and we were doing at one point about 300 deals in a year, 30 deals a month. We were fixing, flipping, turnkeying, renting, anything that you could think of. So personally, I've been a part of over 850 deals in the last 6 years where I've touched them in some way or fashion, because I've sat in every single seat as a real estate investor: acquisitions, dispositions, closing coordinator, the finance portion, property management, project management. So I've sat in every single seat. And every single seat I've sat in, I've also been able to extract myself out of that seat to kind of be at that higher level. So I've sat on a couple of the leadership teams of some companies over the years too, getting to know really what it takes to run a real estate investing company. So saying all of that, where I saw a huge need is a lot of those investing companies really don't know what their numbers are on the back end. They say, hey, we're doing 30 deals a month. We're crushing it. We're doing all those keywords and terms, and you know what? On the back end, they have no idea if they're profitable or not. And they really don't know, okay, if they know they're profitable, are they doing anything with those numbers to become more profitable or more secure in their business and be able to have a stable business that's going to be able to handle any type of market. So that's where I really saw a huge need. I'd been able to do that over the years with those other businesses, kind of put them on the right path. And so someone said, you really should help other businesses do this because it's such a huge need. So I kind of jumped into that space. And I've been able to help several people now, have up on my website testimonials and stuff of just people that when we dive into it, they really know now what their numbers are and really how they can take actionable steps from there. So that's a little bit of my background, how I got into what I'm doing today, helping real estate investors with their finances on that side of their business.
I love it. I recently saw a little video from Gary Vaynerchuk, and he was interviewing this business owner. And I'm sure you saw this guy too. And they sell, I think they were selling athletic wear or something. And the guy said he did about $10 million over the last 3 years. And then in the very next sentence, he said, but we're not profitable.
Hmm.
I'm like, whoa, 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 right? Like, help me understand, right? So we're talking to real estate professionals and real estate investors, but how can you run a business where revenue is $10 million and not be profitable? I mean, unless you're spending $10 million and $1, I guess. I don't know. Help me understand what I suppose I need to be tracking in my business to understand whether or not I'm profitable.
Sure. In a rental type company, that might be a good thing if you're bringing in 10 million in revenue and you don't make money because you don't want to make money as a real estate investor for the tax purposes.
That's right.
But in a case like that, it sounds like he might be selling $100 bills for $50. So he's got the business and the clientele, but he's just selling them and not making that money, basically, if I had to give you a real simple analogy. So I'd say in a real estate company, the things you really need to know are your overall numbers as far as your profit and loss. And a lot of people already know that and probably can pull that. But what I see too is a lot of real estate investors, if they're working with a bookkeeper or someone like that, they don't know where to even put the entries in order to know if it's really should go on their profit and loss or on their balance sheet, because your real wealth sits on the balance sheet side. That's where your assets and liabilities are. You can see if you're into a property for how much, if you have a loan on that property, is it covering what you're into it? Are you building your net worth? So really the things you should be looking at is, are you building your assets, and do you have properties on your balance sheet that you're holding inside of, if you have rentals or even if you have fix and flips, until you sell those properties, they sit on that side of it because they're an asset for you until you sell it. And then you capture that on the profit and loss. But you can also be looking at the property during the lifetime of that property, if it's profitable or not for you, or even kind of predict if it's going to be profitable when you sell it. So as a fix and flipper, you would want to have someone make sure they're entering everything that goes onto that property. So that way you know where you stand on that property at any time. So you could go back and say, hey, are we on budget for this line item or whatnot? And you'd be able to pull those numbers with someone who's really savvy and knowing how to put those numbers inside of QuickBooks or some type of accounting software to give you those reports that you really need to see, because then that helps you as the business owner see, on this specific property, are we going to be profitable? If you have rentals on my portfolio, is my portfolio as a whole profitable? And then even I like breaking it down on rentals too, inside of those types of software, so you can see, what is this cash flowing? Do I have cash cows, or do I have, cash monsters that are just sucking up all my profits?
That's
So
right.
really, really knowing your numbers helps you know, do you have an actual business that is creating assets, or, are you just kind of in the dark and you don't even want to look at that side?
So you said P&L, income statement, balance sheet. For some of us new investors and business owners out there, what's the difference? Help me break that down. Like, do I just go to Wave Apps or QuickBooks and have it run these things and spit it out? Like, how am I supposed to look at this? Break that down for me, David, because if I'm new and I'm just getting started, it seems a little daunting.
That's a great question. If you're just starting, then it is the best time to get inside of a system like that, because I also love automation. Abhi's a huge fan of automation and systems too. So if you have a system like Wave Apps, and Wave Apps is nice because it's free.
Yeah.
And so that's a nice one. So if you're just starting out, don't have many transactions, maybe don't even look into QuickBooks because it can get expensive fast. But QuickBooks definitely has a lot of the functionality too. So if you start entering data inside of those types of software, it's going to put those entries on one of those two statements. It's going to go on your profit and loss, which is basically anything that is an actual expense to your company or income to your company. But the balance sheet is more for when you hold your properties, whether it's a fix and flip all the way until the time that it's sold, and it holds your rental portfolio there. So you would see, like, if you buy it, let's take a really simple example. You buy a house for $25,000, you put $10,000 into it, you're into that property for $35,000. That would sit on your balance sheet, number one, until you sold it. Let's say you then either wholesaled it or wholetailed it or turnkeyed that property for 50 grand. So then 50 grand would go on your P&L when you sold it, but then that 35 grand that you were into that property would also show up on that profit and loss when you sold it too. So you could see the gross profit of that single property was 15,000. And then on the rest of the profit and loss, is the expenses for the business. So actually to run your business, if you are marketing your properties, or if you have office expenses or subscription services like QuickBooks or like a Podio or some type of CRM, that would go on your profit and loss also. So you could see, what did I make on that property, then minus all my other expenses for what it takes to run the business, and then that's my my net profit for the company. Then on the balance sheet, you don't have the profit and loss or any profit over there. It's really your assets and your liabilities and your equity. So what equity do you have in the business? What liabilities, like what loans? So if you're getting private money, or if you're getting even mortgage money, or what type of ever funding you're getting, would sit on your liabilities. Any credit cards that you have, things like that, that would be long-term or short-term liabilities to you.
Yeah.
But also your assets, it's your bank accounts are on your balance sheet. Your properties would sit on your balance sheet. And there's other things that you can have as assets, but those would be the main things for real estate. So that's really the main difference between those two. But as you put entries inside of that system, it assigns it to one of those two automatically, and you can pull those reports very simply from those systems.
Right.
And I would also,
so if
I would,
if I wanted to do this like very basically, right? Like if it was if I like I'm totally getting what you're saying, right? Like I'm totally feeling it. It makes sense to me. But if I'm a newbie, like how do I take an asset and like put it on this balance sheet on whether it's QuickBooks or Wave apps, and then like keep track of it? Is there like a course that you recommend, or do I just go through the help section of QuickBooks or Wave apps?
QuickBooks has some help sections, but it's almost like you need someone to tell you where to put it that first time.
Right.
If you go to, so I'll give it, here you go. It's right here. Step number one, when you get something like Wave apps or QuickBooks, you need to set up your chart of accounts. And so when you get a new property, and the first step should be go to your chart of accounts, because all of these softwares have that as a tab inside of there, like accounting, chart of accounts. And then inside of there, you would set up that property as an asset, and that would assign it then to the balance sheet whenever you put something in that category for that property. So it's 123 Main Street. It's an other current asset if it's a fix and flip. So that way you assign it then as an asset. So that way it ends up on your balance sheet as you're assigning anything that goes to that property. Like if you purchase that property, that purchase price, you would enter it in like as an expense.
Right.
And then on the category, you would see, because you've already created that property, it would pop up and say 123 Main Street. Okay, I need to assign it there. And then now, once you actually assign that expense inside of there, you can now go to your reports, and guess what? That $25,000 purchase that you just entered as an expense on QuickBooks or Wave apps or whatever the software is now shows up on your balance sheet. But at first, you first have to set it up on your chart of accounts. And honestly, there is, like, if you go to just QuickBooks, how do I set up a chart of accounts? All these softwares have a ton of information of how to do that. But for real estate investors specifically, it is a little bit different, because you're not selling just widgets. These are actual assets that you're holding. So it is like when you set up a property, you should be setting it up as an asset, because it is an asset until you sell it, and it's still an asset when you rent it out. But then once you rent it out, you can actually start putting more things on your profit and loss instead of assigning it to that property. That's a little bit more advanced, but that's if you're actually doing the bookkeeping yourself. But that's just another way you can expense things off the properties once it becomes a rental, because then you don't have to keep adding it to the property, like to that asset.
So where do people go wrong with all this, right? Because that's also a major challenge. They're not using QuickBooks, they're not using Wave apps. So how on earth do they keep track of the stuff that they're buying?
If they don't have those softwares, I like just Google Sheets. I know that's really cool. If you're only doing like 5 to 10 deals a year,
makes sense.
If you're doing one a month or whatever if you think like, hey, I can handle this and I can just track it myself, then inside of there, I'd have different columns. Like it's a property that I'm holding. This is the address for it, and then anything assigned to it. Then you can just run it almost like a checkbook inside of there, just assigning things to it. Because what the thing you want to think about at the end of the year, you want to be able to hand that to the accountant and have him say, I can do the taxes and get this done for you pretty easily. And so you're just assigning things like, okay, this is an expense for this property, and he should be able to take it and say, okay, this is, even if it's on a Google Sheet, this is where it should really go if I put it into my accounting software. But Google Sheets is free, and it's like you could just be, if you don't,
and
if
it's
you're
easy.
Right. If you have
Yeah,
5 to 10 entries a month, you could be running it all yourself, or get
yeah,
Wave apps too, because it is another free software
that's
that
right.
you can go in there, and it's an accounting software where it kind of has some of this already pre-built for you, so you could
Yeah.
see where you would actually start setting up the chart of accounts and
Yeah,
whatnot.
and the key to this too is I feel make it simple for your CPA at the end of the year. Otherwise, you're going to pay a really high CPA
Yeah,
bill for doing something that you could have like been easily tracking on a free Google Sheets or a free Wave apps the
right.
entire year. I know you want to talk about the profit strategy sessions because I think that's really, really interesting. Help me understand what a profit strategy session is and how regularly we should have it in our business with our team.
Sure. I'm going to give it two definitions. If
Cool.
you have it yourself, a profit strategy session should be looking at your books. If you have a clean set of data, like we were just talking about, if everything's been assigned to the right places, because you had also asked about what's one of the biggest things that kind of trip people up, it's not setting it up correctly. If everything goes on the profit and loss, you're probably doing it incorrectly. So that's one of the biggest things that I see. But as far as a profit strategy session goes, we're going to assume that you have your books up to date, they're current, and they're also on everything's where it should be. You should be looking every month, what are we spending the money on that is bringing us a return, so we can see, should we be spending more in this area or that area? Because if you go to a lot of CPAs, they're going to look at your expenses and say, how can we cut all of this? I'm more like, how can we grow an expense in order to exponentially grow your income? So I like saying it's a profit strategy session, looking first of all for the things you can do that you can spend money on to return money into that top line revenue.
Yeah,
And then from there, looking at it, is there anything that we really shouldn't be spending money on?
that's
And
right.
I like doing that once a month, but then there's some companies that might do it once a quarter. It's doing it on a consistent basis, which is really the key to a lot of life, is doing anything consistently.
Yeah.
So if you can find something that works for your company, I would say at the bare minimum, do that at least once a quarter,
Yeah.
but it should be more like once a month for that profit strategy session.
Yeah.
If you
So what if I wanted if I wanted to buy an Italian espresso maker? Is that like I can assign that as an expense to like 123 Main Street, right? Because that's clearly a legitimate business expense.
It depends on if you're buying it for that property, or if you're buying it for, yourself, or if it's for the office that you're working in, because then if it's providing to other employees in there. So it's like you can get a little bit creative, but if you're just buying
Right.
that to put into your own house for your own, that's not going to be able to put on your P&L for that, and or at least to be expense at the end of the year, that would have to be taken out.
But I
So
want it.
just because you want, well, let me tell you this: if you're making the money and you can see that you can afford it, go out and get it. It just might not be able to be expense as a business item unless you put it in your office. So
See, this is why I need like you in my life on a consistent basis, right? You're like, Abhi, no. Yes. No. Yes. You can't wear that belt. Like no, that this is just not a business. Anyway, David, this has been fun. Thank you so much. What's the best way that our listeners and viewers can get in touch with you if they have any questions about just making profit a priority?
sure, simplecfosolutions.com. If you just go there, there's an actual business health assessment that you
Okay.
can take if you want to see if your business is a healthy business. And then from there, there's an apply right there if you want to see if you work with us. And then we also have a bookkeeping company too, RNL Bookkeeping. So if you just go to that website, if you just apply, we can help you from consulting on the side of your finances all the way down to bookkeeping.
I did do the health assessment, and I don't know, David, I got a really weird email. They just said, Abhi, you have to do 250 push-ups a day, and it hasn't helped me at all. So I don't know. I think I took the wrong health assessment.
That sounds like the wrong health assessment. So
I think so. So I'll go to the actual website and take the right health assessment, and then we can talk about my financial situation. David, thank you so much for joining me. I certainly appreciate it.
thank you.
Think Realty Nation, this next segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. So what does the outlook look like for single-family rental investment? Well, it's kind of an interesting play. I'm bullish on SFR. Like, if you're buying single-family rentals consistently over time, you're going to win the game. If you plot U.S. home sales, and my friend Greg did this the other day on Instagram. If you plot U.S. home sales and values since like 1963 or 1970, it starts in the 60s, I think, this chart. It just kind of does one of these things, and this being, of course, that Great Recession. So that is kind of headed up and to the right, which is where you want to be when you're looking at overall investment. And listen, if you buy anything for the long term, you're going to be in good shape, especially in this country. So here's the deal. In high growth markets, this is on, where's this article? This is on National Real Estate Investor, nreionline.com. The quote, in high growth markets, including Texas or Florida, SFR yields after expenses now average 4 to 5%. In the 4 to 5% range, and that's according to Douglas Bent, the president of Bent Enterprises. And, quote, because investor demand is still increasing, because even though yields are lower than they were a year or 10 years ago, they are still higher than the returns on other financial assets. So the higher price rentals, like some of the bigger companies have been investing in, a lot of those houses are above the median price, and those gross yields are maybe in the 7 to 8% range. So when you take a look at buying SFR, I think you're in pretty good shape. And there's a strategy that many pro investors have been deploying over the last year or 2 or 3. You know what it is? Take a look at secondary and tertiary markets. When we have the Think Realty radio show, I'm sure it's archived somewhere on thinkrealty.com, you can hear me talk about secondary and tertiary markets a year and a half, 2 years ago. You have to start taking a look at these other markets if you want to be successful. But there's still opportunities in primary markets. You just have to look. So, that being said, you want to get in touch, certainly do so. Go to thinkrealty.com. If you want to get in touch with me, you can find me anywhere online, primarily on Instagram. I am also going to be answering questions on Quora.com as well, so you can track me down there. LinkedIn is one of my favorite platforms as well. You can also check us out. Go to thinkrealty.com. It's been fun. This podcast has been brought to you by Residential Capital Partners, a leading hard money lender with a national scope and local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves. They know your business. Visit them today at residentialcapitalpartners.com. Thank you, Realty Nation. That's a wrap. Get in touch. You know how to do it. Until next time, happy investing.